Mortgage holders on lower incomes and those with tracker mortgages have been hardest hit by the succession of European Central Bank rate rises that we've had over the last year and a half. There have been 10 European Central Bank rate rises. Now, the people on lower incomes are probably mostly people who are trapped with vulture funds, the mortgage prisoners. These are people whose mortgages were sold by the conventional banks to vulture funds and are managed by the likes of Start or Pepper. And they have been hit, a lot of them, by huge increases in mortgage rates. They're either on tracker rates or on variable rates, but they can't fix because the vulture funds and the credit managers, the likes of Pepper, don't offer them fixed rates. So they have been hit really hard by rate rises. Some of them have seen the amount of income that they use to pay their mortgage go from about a third of their income to about 40% of their income. They are huge increases. And of course, people with trackers have been hit hard by the 10 increases. If you're on a tracker mortgage, every time the European Central Bank interest rate goes up, you suffer an increase in your rate. The only good thing here is that we might see some European Central Bank rate cuts next year. The European Central Bank is due to meet this week. Very unlikely that they will indicate any cuts in the rate, but markets are convinced that European Central Bank rates are coming down next year. Now, that should be good for everybody, but whether those rate cuts will be passed on quickly or not is another matter. But it has been a tough time in the last year and a half for people on trackers and those who are lower income, have a mortgage, but they're the lower income of the people who have mortgages.